Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So yesterday, unfortunately, market was not able to keep perfect short-term bullish context. It's dropped lower right to the our 1750 target, 1750 area, through testing of this neckline. And then take a look at challenging the grabber that has been formed recently. So it doesn't make the big impact on the daily chart in the longer term bullish context, but in the shorter term, the fact that it was not possible to keep the perfect scenario, we have to be careful and consider possible position taking only around the strong support areas that we have specified previously. So for the daily chart, everything remains the same. So preferably if market will stay above 1750, but final ultimate invalidation point is 1723. So if market somehow drop below this area, forming the bearish reversal swing, it means that we should get taken out of these lows and further downside continuation. So currently it's a bit early to talk about it, but still we should keep in mind this. So in the current moment for us is a crucial moment to see that price will stay above 1750 area. It's very important, just because on the forward time frame chart you could see that this is confidence support that we discussed previously. So an area of the 1750, 1760, we said this will be an area for taking the position. Unfortunately, the position that we have taken previously, and this was very good rally up from the 1760, has been erased. This market dropped and triggered the break-even stops here. It was under impact of the statistics release on real estate market in the United States. The numbers were very, very good in the United States on the home building sector. So this has pushed price lower. By this action, market simultaneously has completed this A, B, C top OP target. And currently we have the upward reaction on agreement support. This confidence support and OP target, previous top as well. As you can see, the bounce up. So that was an area, as we said previously, for taking the position. If you have a bought gold around this area, now you could move stops to the break-even and see what will happen next. In general, this strong sell-off is not good point for the gold, and because this is also, as you can see, bearish reversal swing. So because swing down here with the acceleration, as you can see, the next candle becomes greater, and it greater than the previous swing up. Potentially, in most cases, this type of action leads to another extension to the downside. So, but here we have only the final level for a position taken if this will happen. If somehow 1750 will be broken again, in our break, our positions will be out on the break-even stop. That will be only the 1723, the last area where we could consider taking the position, because right below these areas will be breaking of the short-term bullish context. In general, I would say that it makes sense to think twice before taking position if market will break 1750, because in this case it will return back in the consolidation here in the area of the double bottom, and that in fact will be kind of the failure of the double bottom, since double bottom usually leads to the doubling of the depth of the pattern to the upside, which should be around 1850. If this hasn't happened and market occasionally returns back below the neckline, this is bad sign. The same story as for the head and shoulders. If market doesn't reach the target and returns back and moving in opposite direction of the neckline, this will be also the bad story. So that's why I would say that my wish to take the position will be significantly smaller, lower, if market breaks this confidence support. I'm not sure that I will consider taking a long position around 1723. So this is very important level currently. On the hourly chart, you could see that we have some widening triangle consolidation, and the classical approach for trading this pattern suggests actually the direction of the breakout. So usually market moves in the same direction as breakouts does. So if market will break it down, be prepared for the further downward action. If market returns that back up and break this upward resistance to the upside, it means that market will go higher. That's why currently, in the current moment, I do not see lots of chance for position taking except the 1750. So if you have taken position here, move starts to break even and see what will happen next. Trying to catch and take position somewhere inside of this consolidation, well, that will bring you a not necessary risk because you will have placed stop anyway below 1750. And here you could consider, for instance, if market will form here kind of the triple two buy pattern. In this case, it is possible to consider position taking as well. But anyway, it will stay in relation to the 1750. So in this case, you, for instance, could buy here, placing stops below this area, and just watch what will happen. That's actually the only thing that we could do. Besides, on the gold market, if you will see what's going on there, overall situation also not very friendly. Yes, currently you can see that the interest rate stands in the 618 resistance on intraday charts. It has formed nicely looking bearish engulfing, and it's theoretical. It suggests that might be some downside action, and gold also could rise a bit more inside this range, right? So it will be some kind of maybe upward action back to this resistance. So it'll be great. But at the same time, if we'll see, we have the minor bullish grabber that suggests the taking out of this top, and overall action here was fast and strong. This is gap up opening without closing, so its gap stands open. Well, and overall situation here not very friendly to the gold as well. So that's actually what we have currently on the gold. In 2 words speaking, stay in relation to the 1750 if you'd like to buy. Trying to buy the gold as close as possible to this level with the placing stop somewhere below it. And move stops to the break-even as soon as possible. So that's the best solution currently for those who intend to invest in the gold market.